Welcome back. You're watching The Money Show on ET Now. The Finance Minister has allowed you, the viewer, to access your EPFO, the Employee Provident Fund organization's fund that are lying, basically your savings, contribution from the employer as well, into a retirement pool of sorts for your future. You cannot access it. You can only access it in case you've had a job loss or there's a marriage in your house, and of course when you are set for retirement. But given that this is an exceptional circumstance, you are allowed to withdraw your monies, 3 months of your salary or 75% of the total, whichever is lower. Okay, but meantime, as share prices have tanked, markets have tanked, a lot of companies have been indulging in buybacks. To put it simple, what exactly are buybacks? Well, essentially the company will tell you, the shareholder, that you give me your share back and I will give you a certain value. That value will always be higher than the value that you will get on the exchanges. So for example, a Sun Pharma, whose price is currently at about 380, 385 rupees, they are doing a buyback at 425 rupees. So for you, the viewer, if you want money right now, if you want to sell off your share, you might as well sell it off to the company itself instead of selling it on the exchange. But is it as simple as that? I mean, when should you know that you should be tendering your shares in a buyback, and when should you abstain from that? To talk about that and to explain this concept, I have with me Mr. Kalra, founder and president of research with Target Investing. Samir, thank you so much for joining us on The Money Show. Let's sort of understand this concept. Sun Pharma, Dalmia Bharat, Motilal Oswal, Imami Limited, all of them have announced this buyback, and obviously the price is higher than what you would get in the market. But does that necessarily mean that, if any of the shareholders of these companies are watching, does it mean that they should simply just tender in their shares because they are getting a better price than what they would get today in the market?
So first of all, thank you for having me on here, and especially regarding buybacks, which becomes so simple yet so complex. It's not that easy to judge whether I should give it into, because internally we see 5 factors to play out and judge whether the buyback should be tendered or not. For us, main factor is the cash which the company is giving out. Let's say Sun Pharma is doing around 1700 crore cash, right? Once that buyback is done, how much time will Sun Pharma take to regenerate that money? And are they doing it with some kind of a debt, or all internal cash is being used? Secondly, the main point is whether the promoters are participating or not. Because if promoters participate, then the percentage of market cap. Let's say Sun Pharma is right now 3.6% of the market cap, the buyback they have announced. So it's mere representing more like a dividend outgo from the company point of view and for the investor as well. Certain buybacks, which you can see in 2018-19 done by Infosys or TCS, they were large buybacks, and the payouts were at least 8 to 9%. We generally tender in ones which are above 5% or 6% of market cap, because that means more of the shares will get extinguished and your EPS growth comes in better. So this is the second factor. Third factor becomes, when you try to calculate the EPS and they announce the price share, then the only point becomes clear is how do you want to go ahead of it? Because a lot of people buy stocks just for the buyback participation. That totally you can avoid it, because 99% it really doesn't come into effect and it doesn't play well for the investors as well. Fourth becomes your point of view in terms of, as an investor, if I see the company, are they replacing the dividend through a buyback? Because now if you see, the dividend taxation is very different. If they are doing that, then I don't participate. If they are doing a genuine buyback because they feel right now if the prices of the stocks have really gone down, then promoter are not participating, then I think then the tendering becomes much more better, because then you're buying back share at the lowest price, and then the extinguish of shares will be at a low price. So more shares get extinguished and the price can return to normalcy very quickly. And lastly, when we calculate whether a buyback is sufficient or not, then in that thing is how much the free cash flow is being deployed by the company and how much outgo totally they have given. Because buyback is once a year by Indian law. And once they do it right now and they are not able to generate the cash in past 12 months, next 12 months, sorry, then it becomes very difficult for them to cover it up. And that cash would have been used in a working capital or a better sense for an investor when the time was right. So these four, five topics we take care when we are judging a buyback on a company.
Okay, I want to first talk to you about that cash bit. It's something that sometimes a lot of our retail shareholders may not understand. An investor, how fast a company can generate that surplus cash. So, is there any simple methodology that you could explain, a retail investor on how they can judge that? On a cash burn rate, if you could call it that, or not cash burn, but basically how soon they can generate that cash. Is there any simple methodology with which you can explain that to our viewers?
So moving in the simple sense that you can see 2 years of cash flow, cash balance of the company. Let's say Infosys, for example, this year they have around 30,000 crores cash, and let's say previous year they had around 20,000. So every year they are keeping minimum 20,000 as a cash in balance or in investments. And if they are doing a 5,000 or 10,000 kind of a buyback, then they're able to generate that money within the 6 months. So it's simple that previous this year cash balance minus last year cash balance, and that minimum you'll get, and then you can calculate the percentage of buyback they are actually doing of that cash.
Okay. Another point, Samir, that I want you to clarify for our viewers is that let's say a company has announced the buyback, and let's say I own 100 shares of a company, and I decide that, look, this price is great, it's significantly higher than what I am getting in the market, so I might as well just tender my shares into this buyback. But does it necessarily mean that all of my shares will be bought by the company and I will get the entire value of the buyback into the 100 shares that I own?
So that is not how it comes out eventually. So if you have 100 shares and let's say the company announces buyback of around let's say 3.6% of the shares outstanding, so then that means around four shares you can tender. You can give them more if you need, but when you receive the form of a buyback, it says you can tender around four shares. You can bid for more because certain times a lot of retail investors skip buybacks, so the acceptance can be higher. So you can let's say give let's say 10 shares and they have asked for four, and if other retailers don't participate, then they take eventually let's say 5 or 6 shares of yours, uh, which is more than the four which was the minimum by the company. So it depends on the participation of the buyback. That's why if promoter is not participating, the percentage really goes up for a retail investor, and that really shows the confidence by the company in the stock price as well.
Yeah, that as well is actually an interesting point. If the promoter himself is participating in this buyback, which means he is also sort of offloading some of his shares. But if he or she is not participating, it means that even the promoter has confidence in the company. So that as well is a positive sign. Now, direct question, Samir. Like I mentioned, it's buyback season of sorts because market prices are so low, right? I mean, Imami, India Bulls Real Estate, Sterlite, Motilal, Dalmia, just to name a few, are all announcing a buyback because they are looking at the market price and they're saying, look, prices are so low, we can as well get our shares back at a lower price, increase our earnings per share as well because the denominator reduces. The question is, Samir, if I'm a shareholder today of any of these companies, I'm getting such a low price on the equity stock exchange, why would I not tender in my shares in the buyback? I mean, any specific company where you believe that shareholder should not tender in their shares?
So I think for me, the main pure example becomes where companies, like let's take an example of Dalmia Bar. They're mainly into cement, right? So they have to constantly extend their capacity, and for that they always need cash. And for me as an investor, I rather keep that 500 crores as cash for a capex tomorrow, or keep a cash when my working capital stretches, because now cash flows are more important. And that's where I feel maybe a Dalmia Bharat, if I was holding, I wouldn't like it, and I would still tender and sell off when the situation brings it to a normalization. Sun Pharma, I would still tender it because they are a cash flow generating machine, and these kind of cash they can return in next 1.5 2 months, irrespective of whatever the lockdown post lockdown situation comes. So I'm more comfortable tendering in a Sun Pharma rather than tendering in a Dalmia.
Okay. Great. Samir, this was extremely valuable, and I hope our viewers as well, who have shares of these companies and shares of even prospective companies that may announce buybacks, have taken some valuable lessons from this. Thanks so much. It was a pleasure getting on board your views on this topic. Okay, on that note, we will take a very short break. Don't go anywhere. This is The Money Show.